In this video, I want to talk about property taxes and how it works for both buyers and sellers during a real estate transaction. Navigating property taxes can sometimes be complex, and whether you're buying or selling, understanding these factors is going to be very helpful in making informed financial decisions. Property tax adjustments usually happen at closing or the possession date. When a property changes hands, it's essential to fairly distribute the property taxes between both the buyer and the seller. This process, known as the property tax adjustment, is typically handled by legal professionals during the closing of the sale and or the possession date. In most municipalities, taxes are going to be paid for on June 30th or about midway throughout the year at the end of June, which are going to cover the entire calendar year from January 1 to December 31st. Depending on when the closing date is, adjustments will ensure that each party pays their fair share. An example of this is if the seller has paid the full years of property taxes, let's say on June 30th, and the possession closing date is to happen after June 30th, then the buyer will reimburse the seller for the portion of the year that they own the property. Now, vice versa, if the property taxes have not been paid and the closing day, let's say, is prior to the payment date, midway through the year, then the seller will provide the buyer with a credit for their share of the taxes up to the closing day that they resided in the property. These adjustments are calculated precisely to the closing date, ensuring that an equitable distribution of tax responsibilities happens. Now, there are a couple different methods in which property taxes can be paid. And the standard, as I sort of mentioned above, is the one time lump sum payment. So, taxes are due at the end of June each year. This payment covers the entire calendar year, as I said before, from January 1 to December 31st. So, it'll get paid in that one lump sum big total on the end of June. So the other process would be through mortgage payments. So some homeowners will opt to include the property taxes within their mortgage payments. The mortgage lender will then collect a portion of the annual property tax included in that payment, and then they remit that back to the municipality on behalf of the homeowner. The third option will be the tax installment plan. And so this is something that I know my local city offers, and your city may as well. But essentially, it allows the property owners to divide their annual tax bill into monthly payments. This provides a manageable way to handle the property tax and payments by spreading them out throughout the year. So that is the general structure on how payments can be made and how the adjustments would work when it comes to closing day. I know for many buyers, it's good to plan and prepare for this, especially if you're working out the final costs that you may have when it comes to inspection costs, moving costs, setting up new utilities, but also preparing just in case that you do have to reimburse the seller for the taxes that they've already paid. Now, many times, if someone is doing one of those other methods in regards to the tip program or through their bank, then the lawyer's assistance will adjust the taxes accordingly. It is important as a buyer when you're pre-planning out your closing costs, such as home inspection fees, moving costs, setting up new utility deposits, as well as you should prepare for a potential reimbursement of a tax. So look at your closing day, talk to your realtor, talk with your mortgage broker, just to make sure that you have all your I's dotted and your T's crossed. Now, with property assessments and how those tax values are assessed, right? Property assessments in most municipalities are typically conducted annually. Assessment notices get sent out early in the year. These assessments are going to determine your share of municipal taxes. Now, anyone can look at them and say, that sounds about right, or I don't agree with this. It's too high or it's too low. Your tax is lower. But if you do feel that your tax assessment is incorrect to the market value, then you can usually appeal within a specified period after receiving your assessment notice. And the details will be on your assessment notice of the time limits you have to appeal and who you can contact to go throughout that process. Overall, understanding property taxes in the area in which you're looking to buy or sell a home is essential for both buyers and sellers. So familiarize yourself with the assessment process, your payment options, and how the tax adjustments work will allow you to make those informed decisions to ensure that you have a smooth real estate experience.